Good afternoon, everyone. To extend warm welcome to our honorable guest for today, Mr. Siddharth Rathore, Assistant Professor of Economics, Gargi College, Delhi University, and Ms. Nikita Jain, IES, Assistant Director at Development Monitoring and Evaluation Office, Niti Aayog. Mr. Prashant Goyal, convener, Think India Chandigarh, and everyone present here to become part of much awaited webinar on a contemporary topic, that is Decoding Union Budget 2022 in collaboration with our media partners, the Hindu Cafe and the Kootneeti. It's an absolute pleasure that I, Nancy Jain, will be your moderator for today's event. To begin with, I would like to introduce Think India. Think India is a forum of students from premier institutes such as IITs, IIMs, NLUs, and various other such premier institutes across India. It is a pan-India initiative that aims at bringing balance of the country and instills in them the nation-first attitude along with an intellectual spirit. The chapter has successfully completed 3 years and has organized a number of legal workshops, Vidhi Vichar lecture series, Vidhi internship at Punjab and Haryana High Court, Niti internship programs, cyber law symposiums, and many more exciting events. Our past events include mooting workshop, a COVID awareness program which extended over a week, discussion on farm laws, panel discussion on legal services, of tribes in India, Samvidhan lecture series, a workshop on research paper writing, and other such events. To welcome you all into this vibrant learning community. Thank our media partners, the Hindu Cafe and the Kootneeti. The Hindu Cafe is an initiative of Hindu Cafe Foundation. It works among youth to propagate and popularize 4 things: right to life for every human, advocating idea of free market and making our youth aware about evils of socialism, practice our tradition and culture without any interference of state. Every student must have rights to truth. No distortions in our text. Thank you. The Kootneeti is a New Delhi-based digital media platform that brings you analysis focused on international relations and diplomacy. It produces in 3 languages, that is English, Hindi, and Spanish. Till now, it has reached a reader base in 63 countries. Do join them on their social media handles for more updates. Forward, I would like to quote Mr. Jacob Leo. The budget is not just a collection of numbers, but it's an expression and aspiration. The union budget has a great impact on our lives and the economy. Having said that, I would like to introduce our key speakers. We have with us 2 esteemed personalities. Our first speaker is Mr. Siddharth Rathore, who is working as an assistant professor at Gargi College, Department of Economics, University of Delhi. Sir has completed his Masters in Economics from Delhi School of Economics in 2009 and has postgraduate diploma from Texas Metcalfe School of Business in Artificial Intelligence and Machine Learning in the year 2021. He gives guest lectures on economic issues to senior bureaucrats and defense service officers at Indian Institute of Public Administration as a guest faculty and mentors UPSC aspirants. We are grateful to have you, sir. Nikita Jain, she is in Indian Economic Services and works as an Assistant Director at Development Monitoring and Evaluation Office, Niti Aayog. Ma'am is an alumnus of prestigious Delhi School of Economics, wherein she completed her Masters in Economics in the year 2018. Ma'am is a trained economist, a skilled researcher, and an ardent public speaker. Ma'am loves to learn about socio-economic scenarios around us and dig deeper into the issues to provide the policy solution for the same. Her areas of interest include education, personal finance, evidence-based public policy, and financial markets. Thankful to have you here with us. Before we begin the session, I would like to tell the participants that they can write their names in the chat box if they have any query during the session, and we will be giving them opportunity to ask their questions during the interactive session round. So they can write their names in the chat box. So now, without wasting much time, I would like to request Siddharth sir to illuminate the participants with fundamental aspects and effects of Union Budget 2022. So you can now take the platform.
Thank you very much. I guess Nikita will introduce the flow of the entire talk that we are going to have, and then I'll start.
Everyone, thank you, Think India, for inviting me and Siddhartha for this session. I welcome you all to this webinar, Decoding the Union Budget 2022 and 23. Thank you all for spending some time with us today, and I hope that you take some understanding back from this session today, not just about this year's budget, but actually about how how a budget document can be analyzed, so that this skill can be actually used in future as well by you. So I ask Siddhartha to share the slides. Meanwhile, till then, I'll lay down the session plan before you, that how do we plan to go about the session. So we'll start off with explaining you the fundamental concepts of the budget and how you can read a budget document. We'll be explaining you the financial accounts, the timelines of the budget, the structure of the budget, and the associated terms with it. Post that, we'll actually be analyzing a few trends of the budget, and from there the budget, which will be specifically focusing on this year's budget, with all the key thematic areas which were covered by the budget, and the focus areas of this year's budget will be covered in the second part. So the first part will be taken up by Siddhartha, and I'll come in between for the second part. I would request all the participants, if they have any questions or clarifications, please feel free to put it in the chat box. We shall get it back at them in the end of the session. And I'll request Siddhartha to now start the budget fundamentals.
Yes. So first of all, thank you very much for inviting me and Nikita on your platform. And I've recently come to know about the platform and the activities that it has been doing. And apart from that, although I do know about Kootneeti, since a couple of my professors are associated with it as well. So with that done, I welcome you all to this particular webinar, and I will be taking the initial section where we'll be discussing about the structural aspects of the budget. But do note in mind that all the views that are presented here are personal views. They do not reflect the institution that we represent. Let's see the first aspect of the budget that is there, which is the financial accounts. Now, in financial accounts, you have three kinds of accounts in India, which are the most critical accounts when it comes to budget making exercise. The first is what is called as Consolidated Fund of India. Just one question that I have is this a completely English oriented audience, or a bilingual language would also work with all of you?
That's for your
Okay, great. So when we talk about the Consolidated Fund of India, it is the main account of government. So when you are talking about budget per se, when we are talking about budget, we are basically talking about Consolidated Fund of India. This is a account which is also mentioned in the Constitution under Article 266, and it is the account in which all the receipts are credited and all the payments are debited. I'm hearing some disturbance from some end. That's fine. So in India, this is the main account. So ये जो भी हम बजट के अंदर पढ़ते हैं कि बजट में इतना एक्सपेंडिचर हो रहा है या इतना रेवेन्यू आ रहा है, all of that has to relate with Consolidated Fund of India. And if the government wants to take out, if the present government wants to take out, or any government wants to take out a single rupee out of the Consolidated Fund of India, it needs to have the permission of the Parliament. Therefore, you see that Parliament has complete control over this particular account. Then you have what is called as Public Account of India. Public Account of India is where the Government of India acts as a banker to us. So in a similar way, like we can deposit money in banks and the banks will give interest to us, and whenever we want that money, we can have that money back with us by asking the bank to give it back. Similarly, you have Public Account of India where people, through their national saving certificates and other saving instruments, lend money directly to the Government of India. It is not through the Consolidated Fund of India. ये सारा पैसा Public Account of India में जाता है, and what is key is that this account is completely under the control of the executive. If the government wants to spend any money from this particular account, it need not take the permission of the Parliament. It is completely under the autonomy of the Finance Minister. And then you have a third account, which is the Contingency Fund of India. Now, in Contingency Fund, as the name suggests, under Article 267, any advances that the government has to make where none of the houses are in session, and it's an unforeseen expenditure. So, for an emergency point of view, around 500 crore rupees are kept in the Contingency Fund of India, and it is under the purview of the President of India. So, these two accounts are not under the Parliament. Only this account is under the Parliament. And another key aspect that you need to understand is that nowhere in the Constitution of India, since a lot of you are from legal background, you would already know, nowhere in the Constitution of India there is any term called as budget. The term that is used for budget is called as annual financial statement. It's called annual financial statement. I hope you can see the annotations as well. So it's called annual financial statement under Article 112 of the Constitution. So there is no term as budget. Instead of budget, what happens is that the Parliament passes two separate bills. One we will talk about is called an appropriation bill, and the other is called as a finance bill. So appropriation bill से आप expenditure करते हो. So any money that you want to take out from the Consolidated Fund of India has to come out through the appropriation bill. And if you have to put money back into the Consolidated Fund of India, it's through the finance bill. So that's the income side of the budgetary provision, and that the other one, the appropriation bill, is the expenditure side of it. Then comes the timeline of budget. So the way that we have designed the timeline is somewhat similar to an F1 race, where you can see from the start to the end that how is the budget moving, how is the budget introduced, and how does it move in the Parliament. So when the budget is presented, the budget is always presented on the 1st of February of every year. Historically it was not the same. It happened after 2016 when the late Finance Minister Arun Jaitley started this new convention of introducing the budget on the 1st of February. Earlier it used to happen on the last working day of February. So the budget comes on the 1st of February, where the Finance Minister lays down what is called as the budget speech, and it is laid down in the and the budget speech always happens in Lok Sabha. Simultaneously, the budget is also laid down in Rajya Sabha. But it's not just the budget. Apart from budget, there are multiple documents which are also introduced into the Parliament. We'll just have a look at all those documents as well. So these are the different documents which are presented alongside the budget speech. So this is just the speech of the budget and the introduction of the budget in the Parliament. What happens in the next step is that for the next 2 to 3 days, so from 2nd to around 4th, the Parliament is being convened, both the houses are being convened, and there is a broad discussion over the various measures and various proposals that the budget has introduced. So these days, if you see Rajya Sabha TV or Lok Sabha TV, you will see all those debates being happening. So in the second phase, we call it as a general discussion phase, where the process lasts for 3 to 4 days, and there is general discussion on the budget. However, a key point to note is that there is no voting that is possible at this particular stage. तो यहाँ तक आपकी कोई voting नहीं होती budget के ऊपर. Then comes your next stage, the third stage. The third stage is where the houses of the Parliament are adjourned for 3 to 4 weeks. And in the interregnum period, what happens is that all these demands, all the entire money which every ministry is asking, is now being scrutinized by what is called as departmental standing committees. Now let me show you this in the budget figures as well. I hope you can see the Google Chrome. Okay, great. So this is the budget website, folks, and here you can find all the documents which are mentioned. So you can see budget at a glance, the main budget that we are talking about. It's taking a little bit of time, I guess. So here you can find all these documents, and if you see, every ministry has a different demand for grant. So what happens is that every ministry proposes that this is the amount that we want. So हर ministry अपना budget से पहले अपना different amount set up कर लेती है that these are the demands that we need for the coming financial year, and they are all listed here. You can see all the ministries are being listed here, and individual demand for grants are also mentioned here. So for example, if I take up the first ministry, Agricultural Ministry, you can see that they are also numbered. The first demand for grant is by the Agriculture and the Farmers Welfare Department. Similarly, you can see the last demand, Ministry of Youth. There are in all 102 demand for grants that have been made this year. So all these demands are basically demands for money by different ministries. Then coming to what happens at this stage. So these are called this money that every ministry has asked is called as demand for grant, and these 24 departmental committees. So remember, these are 102 demand for grants, and they are being analyzed by 24 departmental committees. So they kind of scrutinize with external help, and there are members of the parliament as well. That if is the money which is being asked by the ministry, is it fine, or is it too much? So all of that discussion happens here. Then in the fourth step, we have what is called as. So if you can see, the fourth step is voting for demand for grants. Now, grant is something which every ministry has asked for, and it doesn't become a grant until unless it has been voted upon. So the primacy here is that the parliament has to vote on these grants. So only after a particular grant has been voted upon, or a demand has been voted upon, it becomes a grant. And you need to note here that, and since a lot of you come from a legal background, you must be aware that there's something called as a money bill. So these appropriation bill and finance bill are kinds of money bill. And in case of a money bill, Lok Sabha has overriding powers as compared to Rajya Sabha. So the federal principles are skewed in favor of Lok Sabha when it comes to the budget making process. Now, so this demand for grant can only be this voting can only happen in Lok Sabha and not in Rajya Sabha. Apart from that, if a particular minister, if the parliament feels that the money that is being asked by a particular ministry is more than that it should have got, then or if the parliament feels that this is not warranted, the amount asked is not warranted, it can pass different kinds of cut motion. You have something called as policy cut, where you have complete disapproval of the policy. You have economy cut in terms of reduction of the money, and you have token cut, where you can pass on a grievance to the parliament and to the executive. However, in practicality, none of these cuts can actually be passed in the parliament, because for passing these cuts, you need to have a majority in the parliament, and that in any case the opposition will not have. Just in case if the parliament or if the opposition is able to pass these cuts, the next step would be an introduction of no confidence motion in the parliament. So this is about the fourth step. Then you have the fifth step, which is the passing of appropriation bill. As I told you, that money bill, the taking out of money from the Consolidated Fund of India is through what is called as an appropriation bill, and you pass this appropriation bill in the parliament for taking out that money. However, a key point to note is that no amendment is possible at this stage, because if any changes were to happen, it should have happened on the stage of voting for demand for grants. But now comes the constitutional issue. What if the budget is a prospective budget? For example, the budget of 2022-23 is for the financial year which is starting from 1st of April 2022. Now, what happens if the appropriation bill is not passed by this date? So if by 31st of March, if the appropriation bill is not passed, then you'll not be able to spend any money. No ministry will be able to spend any money. So as a make fix solution to this, under Article 116 of the Constitution, you have something called as vote on account. Now, in vote on account, every ministry, if it has asked for X amount of money, then 1/6 of that money, which basically means a grant of 2 months, is given to that particular ministry. And once the appropriation bill is passed, then you can give the next or the other 10 months of money to that particular ministry. And finally, we have what is called as the finance bill. Finance bill is the income side of the budget, where you are putting money back into the Consolidated Fund of India. Here you can have amendments, and this bill must pass by 15th of April as per the statutory provisions in the Government of India. So this is the path, or this is the timeline of the budget making process. Then coming to reading of the budget. Now, in terms of reading of the budget, you will see that we have 3-4 figures which are often there in any budget document. Until unless you understand these 3-4 figures, you'll not be able to figure out what the budget document says. Let me show you these figures as well. You see, this is this year's budget, and if you can see that all of the figures here are based on these 4 parameters. So you need to understand, even before you start reading the budget and what the budget is talking about, everywhere you will find these key terms: what is budget estimate, revised estimate, and actuals. So until unless you put them into context, until unless you have a complete grip over these aspects, these key technical terms, you'll not be able to figure out what the budget is saying. Let's understand the budget now. Now, if you see, the budget always has 3 financial years mentioned in it. On 1st of February 2022, the budget that was presented was for the coming financial year, was for from 1st of April 2022 till 31st of March 2023, which is the upcoming financial year. However, on 1st of February 2022, there is already a financial year which is running, which is the financial year 2021 and 22. So just like this year's budget, last year as well, there was a budget which was announced on 1st of February 2021. But the key question to ask yourself is that is this financial year over? This financial year will be over on the date of 31st of March 2022. So it is something that what you had planned last year. Just like this year's budget is the planning for next year, we call it planning for financial year 23. Similarly, last year we had planned for financial year 22, which is still not over, mind you. Now, on 1st of February of 2022, 10 months have elapsed from 1st of April. 1st of April se leke 1st of February 2022 tak 10 months have elapsed. Now you are in a position to better assess what has happened in the financial year. So suppose you said that I will be able to raise 100 rupees from taxes, but in the 10 months that have elapsed, you are only able to raise 50 rupees. That means in the next 2 months, either you will not be able to reach the 100 target or you will be able to reach the target. So therefore, you have something called as revised estimates. In revised estimates, based on the 10 month of data that has come up, you are able to reassess the situation and check that where you have landed. I often give an analogy to students at the college level. This is something like what you have planned. So suppose you planned that I will score 100 on 100, or I will score 80 marks out of 100 in a particular paper, say constitutional law, or in IPC I say I'll try to score 80 on 100. But my internals happened, and just 1 month before the examination, I realized that I have got full marks in my internals. I've got 25 on 25 in my internals, and I've studied really well. Therefore, you might be in a condition just 1 month before the exam to reassess that you might be able to get 90 marks. So this reassessment from 80 marks to 90 marks also happens in case of government. The government reassesses its expenditures and it also reassesses its income. So therefore, every year you will find that we have revised what we had planned. Now comes the last part. The last part is that as we had a budget last year, we would have also had a budget in 2020. Just before COVID struck, we would have presented a budget. Now this particular financial year got over on 31st of March 2021. Now we are in a position to say that what actually happened in that particular year. So therefore you have the term of actuals being presented for fiscal year 21. So every financial year, every budget will have 3 financial years. जो आने वाला financial year है, जो चल रहा है financial year वो, और जो financial year खत्म हो चुका है. जो financial year खत्म हो चुका है, we call it as actuals. जो financial year चल रहा है उसका we call it as revised estimates, and the one which is going to come is budget estimates. These are key technical concerns that you should be very well versed with. Coming to the structural aspect of budget. In terms of structural aspect of budget, the budget as in case of your own household, अगर आप घर पे भी देखोगे तो आपके घर पे 2 sides होंगी, एक expenditure side और income side है. In case of budget, we have a receipt side. So the receipt side is nothing but the income side of budget, and the expenditure side is the expenditure side of the budget. So basically the receipt side is, you might be able to recollect now, that the receipt side is financed through finance bill and the expenditure side is through your appropriation bill. Now these receipts that Government of India gets every year is further divided into 2 parts. One is called as revenue receipts and the other is called as capital receipts. Now the easiest way to remember revenue or capital is that anything which comes under the revenue account is recurring in nature. For example, my salary which comes from UGC is a recurring income that I am having. So that means every month I will have that income. So if it's a recurring if it's a recurring nature of income, it should come under revenue account. And if it's a one-time income that I'm getting, for example, if I sold off my car or if I sold out my house, then that will be a one-time income that I'll be getting. So that would be comprising under capital account. So the distinguishing factor between revenue and capital is in terms of whether it is the item is a recurring in nature or is it a one-time feature. And you will find a similar analysis in case of expenditures as well, that you have revenue expenditure and you have capital expenditure. Revenue expenditures will be those expenditures which are recurring in nature, whereas capital expenditures will be those which are one time in nature. Let's go for a deeper dive into revenue account. Your revenue income, which is a recurring income, is further divided into two parts, which is either a tax revenue or a non-tax revenue. So tax revenues, our government every year raises taxes through different sources. For example, corporation tax is one of the main sources of Government of India's income. Income tax, excise duty is still levied, because excise, if you know, that is still levied on petroleum products as well as on alcohol, which are the most buoyant two factors out of the purview of GST right now. And you have custom duties. Apart from, the center also gets money through the central GST. So these are the tax revenues which the government gets every year. Therefore, it comes under revenue receipts. Then you have non-tax sources of revenue. Non-tax sources of revenue are those sources which the government gets every year, but the crucial point is that it is not through taxes. So suppose if the government had given loan to, so Government of India suppose gives loan to UP government, say 1,000 crore rupees. Now, if UP government is taking a loan of 1,000 crore rupees from the central government, it is bound to pay interest on that. The interest payment on a particular loan will be a recurring income that the government will be getting. So therefore, you see that interest receipts comes under revenue receipts, but it is classified as a non-tax revenue receipt. Then the next item is dividends and profits. Now, Government of India also owns a lot of companies. For example, it owns LIC, your Maharatna companies, your Mini Ratna companies, and your Navratna companies. Apart from that, the government also owns your public sector banks, and it also has departmental undertakings. So essentially, what we are trying to say is that the Government of India is also in the sector of business, and because it is in the sector of doing business as well, and it is the major shareholder of those businesses, it is bound to get either profits or dividend. So government gets every year, it gets dividend and profit on account of its ownership into different corporate structure entities that it has. And it also gets, the Government of India also gets external grants. So these are grants which the government is getting from multilateral institutions. But why they are recurring in nature? Because a lot of these projects are not one-year projects. These are spread across many years. For example, cleaning Ganga, or a employment program which the government is running for women empowerment, or for that matter, you take up something like building metro. So these might be based out of grants which spread across multiple years, and they have also been sponsored by multilateral institutions, either like IBRD, World Bank, or Asian Development Bank. So if you're getting grants every year for those projects, it would be classified under non-tax revenue receipts. Then you have the item of capital receipts. Now, as I'd already told you, that capital receipts are those which are of one-time nature. This one-time nature of income that you are getting can be classified into two heads. One is your debt receipts, the other is your non-debt receipts. The key difference here is that you can get one-time money either by selling your assets or by borrowing money. So if you're getting money by selling your assets, it's not creating a liability on you. So your non-debt capital receipts are those is basically that money which you are getting in a one-time nature, but it is not creating any liability. So let us see what are these. For example, the Government of India in the next couple of months is going for a IPO of LIC. You might have heard about this. So what the government of India is doing, it is basically disinvesting 10% of its stake. Right now it's a 100% owned entity of government of India. Now the government is saying that, okay, I will give this 10% to public at large, and I will float its shares to the public, and people can buy those shares. So that is called as disinvestment. But the key point to remember here is that the ownership still remains, the management control and the ownership still remains with the government of India. That is what is called as disinvestment. Where it becomes a strategic sale is that where the government of India sells its entire stake in that particular entity, and the operationalization and the management control is also transferred. For example, the recent case of transfer of Air India to Tata Sons is the example of a strategic sale where the government of India sold the entire company with the management authority as well. So it will be completely managed by Tata Sons, and the government will have no interference there. Those are called as strategic sales. Then you have asset monetization, something which was introduced last year under National Infrastructure Pipeline, investment pipeline. So you might have observed that government has a lot of land, a lot of ports, and a lot of resources, public resources, which are just lying wastefully in the market. So government has realized that why not to give these assets on lease. The key point here is the government is not selling its assets. So the government is not selling it. There is no sale. There is no sale here. Only the item is being leased for some years for the corporate sector to take it on rent. It has to pay a rent for it, and it can operate the particular asset on its own. So it can take the land, it can take the port, utilize it in all the manners and it wants, but it has to pay a rent to the government. So a kind of a rent which is asset monetization. But the ownership will still remain with the government. So this is the difference between these three items where often students get confused. And apart from that, the government also receives money back in terms of principal amount. So let's take the example that we had taken earlier, that the government had lent 100,000 crore or 1,000 crore rupees to UP government. Now, if those 1,000 crore rupees interest is paid back, it comes under interest receipt. But there will be a time when the UP government will have to pay the principal amount, which is the 1,000 crore rupees. And once it pays that amount, it will come under loan repayment under non-debt making capital receipt, because that's a one-time payment that the government is getting, and there is no liability that is being created simultaneously. So this is this side. Let me just erase all the annotations. Then let's come to the debt making capital receipts. Debt making capital receipts is the borrowings of government of India, and this is what we call as fiscal deficit. So just like in law or any other legal profession, the outsiders are not able to understand the nitty-gritties of what is happening in legal sphere. We as economists also try to confuse the public at large by using technical terms. We use terms like fiscal deficit, just like you use different jargons from CRPC and IPC and CPC. We also use these jargons as fiscal deficit, and but in a sense, it's nothing but the borrowings of government of India. जो भी government borrow करेगा वो fiscal deficit होगा, because it will be a one-time receipt which the government is getting, and it is also creating a simultaneous liability for the government of India. So therefore, you can call fiscal deficit either as the borrowings of government of India, or you can also call it as debt making capital receipts, or there is another way which I'll show you, which is that you reduce total expenditure, you reduce your receipts from your expenditures, and you will again get your debt making capital receipts. That part we'll see in the next part of the. Then in terms of expenditures, as I told you that the government makes expenditures which are recurring in nature. The two major kinds of expenditure, which are also called as committed expenditures, kind of committed expenditures. In fact, subsidies is not a committed expenditure. Interest payment is a committed expenditure. Is interest payment and subsidies. These are the two major chunks which the government pays every year. And in fact, this year, as Nikita will tell you, because interest payments have increased this year, the government has to reduce the subsidies, because if it doesn't do that, then the fiscal math will not work. So that part I'll leave to Nikita to explain that what has happened in this year's budget. But you need to understand that these two are major items of challenge for government of India every year. And this year, as Nikita will tell you, that subsidies has reduced because interest payments have increased. Then other kind of recurring expenditure which government does is salaries and pensions. For example, the salary that I get is a establishment expenditure of Government of India. You have different schemes which Government of India runs. You have central sector schemes. These are schemes which are made on Schedule 7 of the Constitution, schemes which come under the domain of center list. So Schedule 7 has the three lists: the union list, the state list, and the concurrent list. Schemes which are made on the union list are called as central sector schemes, and they have to be completely funded by the Government of India. However, although it's not constitutionally very proprietary, the government also makes schemes on state list. In fact, there are a number of commissions which have set interstate commissions that as from legal fraternity you must be knowing. The Sakaria Commission report of 1988 and the Punchi Commission report of 2009. Both the reports have said that these are fraud on constitution, because these are schemes which are built on the state list. Let me give you an example of NREGA. NREGA is basically for rural employment. Rural employment comes under the domain of state list. Despite that, the Government of India has made a scheme and it calls those schemes as centrally sponsored. Here, the central government pays a part of that money, not the entire money. A part of that money is paid by the Government of India. Rest of the money comes from the states. Then, apart from that, the government also has to pay to states because of the recommendations of the Finance Commission. Finance Commission under Article 280 talks about two kinds of major grants. One is a revenue deficit grants to states which are not able to generate sufficient money. So it recommends that every year the government has to pay these particular states so much of money because these are financially impoverished states. So therefore those are revenue account transfers which the Finance Commission recommends. And apart from that, the Finance Commission also recommends grants to states for capital creation under Article 275. So these are two different kinds of grants which the government also gives every year. So these are your major items under the revenue expenditure list. And then come finally to the capital expenditure. Capital expenditure is basically your one-time expenditure which the government is doing, and you can imagine in terms of general expenditure, social expenditure. For example, if the government is building up a road or a highway, Nikita will tell you that there is a lot of focus this year on capital expenditure. The capital expenditure has somewhat increased by around 24% because the government has been pushing a lot of money to schemes like PM Gati Shakti. So Nikita, I leave Nikita to explain all of those areas, but you should know that this has been the major focus of Government of India this year. The government has been trying to reduce its revenue expenditure, and at the same point of time, it has also started to borrow a huge amount. So this all comes under the fiscal math, which Nikita will elaborate. And apart from that, you have loans and advances which the government gives to different states or to foreign countries. For example, the example of 1,000 crore rupees which was given to UP will be coming here. So this is about the budget in terms of the structure of the budget. This is the key to understand the budget. If you understand this structure, then you can read the budget on your own and then you can analyze what has happened. But if you don't understand this, you'll never be able to figure out the budget itself. Then comes the key concepts regarding budget. The first key concept is fiscal deficit. As I had already told you, fiscal deficit is the borrowings of Government of India. जो भी government borrow करेगा हर साल वो fiscal deficit है. It is also called as debt making capital receipts as we have seen, and it is also known as total expenditure minus revenue receipt minus non-debt making capital receipts. Now that's a mouthful, so let's understand it here. So if you subtract total expenditure, if you take total expenditure जो भी हमने खर्चा किया minus जो हमें revenue receipt से मिला minus non-debt making capital receipts, we will be left with debt making capital receipts, because these two sides ultimately have to match up. So therefore, if you take it in terms of arithmetic, this mouthful that I just introduced, fiscal deficit in terms of total expenditure minus revenue receipts minus non-debt making capital receipts, is nothing but the borrowings of Government of India. And if you see how the borrowings have been playing out in the last few years, you can see that we have been reducing the fiscal deficit, the borrowing. It should be somewhere around 3%. There is an act in the parliament called FRBM, Fiscal Responsibility and Budget Management Act 2003, which kind of says that a fiscally prudent path will be if the government is able to control its borrowing to 3% of GDP. So जो भी आपका जीडीपी है उसका अगर आप 3% तक कंट्रोल करके रख सकते हो, that will be a prudent path to be at. However, because of COVID, what we saw is that we had to borrow a lot of money because we had to spend a huge amount on the migrants, on NREGA, on healthcare. So therefore, you see the shoot up that is happening. It is because of COVID-19 that our fiscal deficit had reached the unparalleled peak of 9.2% of GDP, and now the government is trying to curtail this borrowings. And recently, in recent budget, it has proposed that in the fiscal year 23, it will be reducing it to 6.4%. And it has also given a long-term target that by 2025-26, we'll be able to reach a fiscal deficit of 4.5. Then comes your revenue deficit. The other concept, revenue deficit is nothing but revenue expenditure minus revenue receipts. So basically, मेरी जो current income है और मेरा जो current expenditure है, ideally my current income should be more than my current expenditure. If it's not the case, that I'm in a condition of a perpetual debt. So what the FRBM also says is that the government should come to the point where it is a revenue neutral government. The revenue deficit should ideally be zero, but you can see that it's not the same. It's not the case. Recently, just because of COVID, we had to spend a lot of amount because of revenue expenditure, especially because of expenditures on subsidies. Because of subsidy, we had to spend, and we had to spend a huge amount on health. Because of that, our revenue expenditure exploded. Whereas because of COVID, our GDP was going down, businesses were not working well, and therefore the income that the government gets through taxes had reduced. So therefore, our revenue deficit had exploded in the year 2020-21. We are now trying to reduce that as well, as you can see in these budgetary figures. And finally, I'll be talking about primary deficit. Primary deficit is your fiscal deficit minus interest payments. So if you see, if I borrow 100 rupees, this 100 rupees I could have borrowed also because I owe someone else. So I borrow 100 rupees from X, but I borrowed this 100 rupees from X because I owed 50 rupees of interest to Y. So मेरी ये जो 100 rupees की borrowing है वो इसलिए भी है क्योंकि मुझे 50 रुपए interest किसी और को देना है. So at times you need to reduce this interest payment from the borrowing to come to a conclusion that how much have you borrowed for this year. So the fresh borrowings for current financial year is called as primary deficit, where you basically remove interest payments from fiscal deficit to come to that conclusion. And it has also shown a similar path that we have been borrowing, fresh borrowings have been increasing because of COVID, and now we are trying to reduce that. Now, for GDP trends and the further aspects, I will ask Nikita to present the last part of the presentation, where she'll be explaining all of these terms and what has happened in this year's.
For the key macro variables in the current scenario. So let's start with the GDP trend. So here you see that how the growth rate of India has actually panned out since 2006-2007 to the current financial. And you see that the growth was pretty high in the years of the golden period of the economy. But actually, after the pandemic has hit, we have actually crashed. The GDP growth rate has crashed and is actually contracted to 6.6%. So it was extremely important for the budget to bring back the economy to the current levels of the GDP. And if you say that this is what I think a lot of people might be listening and reading in the newspapers about the V-shaped recovery of the GDP. And this is exactly, you can see that how it is panning down. This is a clear base effect, because when your economy has crashed to 6.6%, and then from there it has now grown, it's likely to grow to 9.2% in the current budget. It is expected to rebound to 9.2% in the growth rate. Also, for the next financial year, which is financial year 23, the economic survey has projected around 8 to 8.5% of the GDP. So it's very important to understand that where we stand in terms of the GDP growth to make some sense of the budget. So next, I'll also be talking about the fiscal math. So now, because Siddharth sir has already spent a lot of time in making you understand the basics of the budget and the key terms used in the budget, now actually seeing that how this year's budget fiscal math pans out. And after this, I'll be talking about the thematic areas, which is basically the health sector, the infrastructure, and all of that post this particular slide. So in this particular graph at the right hand side, you will see a lot of graphs, a lot of line graphs and the bar graphs, which you actually represent the revenue expenditure and the capital expenditure. So I'll ask you to focus on the blue bar graphs to see that the revenue expenditure of the government, which Siddharth has already explained, which is basically going into the interest payments, your subsidies, your expenditure on payments and salaries, etc. This has actually been has come down to 0.9% YOY. This shows that the government has actually pressed down the revenue expenditure to pump up the capital expenditures of the budget. So if you see in 2021, the blue graph actually has hit very high, 31.2% YOY. Why did this happen? So because you already know that our economy was facing the pandemic and the vulnerable sections of the society needed some income cash transfers, some immediate measures, fiscal stimulus to form the government. And that is why this revenue expenditure actually went up. But I think it's a very good step that the government has trying to bring back down the revenue expenditure and focus that revenue expenditure into the capital expenditure, which is shown in the yellow bar charts. In the yellow graph, you actually see that the percentage YOY growth of the capital expenditure has been rising for past few years. This year also the growth has been 24.5%. So in the news, you might be actually listening that the capex thrust has been 34.5%. You might be reading a lot of news articles that the capital expenditure has increased by 34%. But why we have written this 24.5% is that we have actually calculated this on the revised estimate of last year and not the budget estimate to make it a more clearer, accountable number. So this is a more credible number here. The capex thrust has actually been focusing on the majority of these areas like highways, railways, telecom expenditure. So all these sectors actually have a lot of multiplier effect. These sectors have a lot of backward and forward linkages. And what I mean by multiplier effect is that if you spend 1 rupee into this sector compared to a revenue expenditure, like if you give out 100 rupees as capital expenditure, as opposed to an income transfer, this 100 rupees is actually going to multiply much more in your economy than a simple cash transfer. So this actually helps your economy to get into that virtuous cycle of investments and keeps your growth rate high. Also, one of the very interesting theme of this year was that 1 lakh crore rupees was actually given to the states particularly for increasing their capital expenditure. So a lot of the money which goes from the budget to the states is actually going into the revenue receipt. And revenue expenditure जो होता है उससे आपका asset creation इतना ज़्यादा नहीं होता है, लेकिन capital expenditure से आपका asset creation ज़्यादा होता है. The more and more you create highways, roads, railways, etc., it will help you to actually inform a lot of markets, connect the markets. It will increase employment generation. It will demand more inputs from the other sectors, and then the input ka demand will also go up. So even those sectors will also increase. The GDP will increase. So that is why this thrust on the capital expenditure. So this capital expenditure which has increased in this budget has actually come by compressing the subsidies, and the subsidies have actually 27%. So what are the subsidies government actually spends on? It's actually the fuel subsidy, the food subsidy, and the fertilizer subsidy. So since the interest payments are like an obligation for the government, because whatever loans you have taken in the past few years, you have to pay interest on that. So it's more or less not in the control of the government, but the subsidies part can be pushed down, for which exactly what the government has done this year. So these reducing by the subsidies and increasing the capex. The last point which I want to make here is that the compression of receipts will actually lead to higher borrowings, because so whatever increasing your expenditure more, actually you need to borrow more if your revenues are not keeping pace with it. So this year the government is actually going to borrow around 11 trillion from the markets. And so this will actually also have some impact on the yields. Yields is basically the rates prevailing in the market, and the RBI might be in a little tough spot to actually manage the yield rates because of the higher borrowing this year. So this was, I know, a little bit technical, but I wanted to still make this point because it's very important for all of you to understand what is going on. We tend to read in these newspapers just as numbers, but until and unless we get the sense of what is exactly happening, what is the trend of it, we don't understand what is happening, and we can't make our own opinions. So for that, to develop our own opinion, it's extremely important to have a analysis of this whole part. So now, I think this will be a more fun part for all the participants here, because this is actually going to talk about what were the thematic areas we touched upon this year. And I think there is a lot of focus on public investment into infrastructure this year. And I think if anybody has heard the finance minister saying that it is actually the public investment is going to prime the private investment. So what they're trying to do is that they're trying to increase the public expenditure into the capital side of the economy, so that we crowd in the private investments as well. So because of the pandemic, because how the animal spirits of the economy have been very low for past few years, the government is trying to revive those spirits, so that the private investments also see ki, okay, this economy has some potential, and then the private players will also invest in it. So one of the very important key areas was PM Gati Shakti here. And I think PM Gati Shakti is actually I mean, this is actually how the finance minister also quoted that because the next 25 years are going to be extremely important for our country, as we have already entered into the Amrit Kal, which is actually reaching India at the 100 after 25 years. And for that to happen, it is extremely important to have world-class infrastructure. And for that, PM Gati Shakti is a step by the government where we'll be investing in 7 different sectors of the economy, which is the roads, the railways, the waterways, logistics, airports, and the ports. So this is going to develop actually a system of mass transport and transit system, not just for passenger travel, but also for goods travel. So there will be a freight system which will actually reduce the cost of transportation of goods and services. So a lot of investment is going to go into the development of national highways, which will be expanded by 25,000 kilometers in the next financial year. There is an announcement about 400 new generation of Vande Bharat trains will be also manufactured. So this is not just actually pushing the infrastructure, but it is also in line with the Atmanirbhar vision of what the PM has, that we have to rely on our own, and we have to actually increase our manufacturing capacities. So this is about the initiatives on the infrastructure side. Now I'll be talking about a few things on the agriculture. So I think a lot of you might already be aware that agriculture sector is still a very important sector for our, because a lot of people actually depend on this for their livelihood. A lot of people are employed in this sector. Even if the GDP contribution is not that high, still in the rural areas, a lot of people still depend on this for their livelihood. And I think from this year's budget, if you read it, so the key theme which will be arising from the agriculture is basically a broad forward-looking agenda for agriculture, increasing digitalization, mechanization of the budget. And I think a similar announcement was made for Kisan drones, and basically they're trying to do this crop assessment, digitization of all the land records by using the drones in the agriculture space. So I think that this is going to help the farmers. This is actually they've not just tried to push money into the hands of farmers in terms of the direct payments, but they've actually tried to push some R&D and public investment into agriculture as well. So this was on the broader front of agriculture and pushing it to digital agriculture. There was also a push towards chemical-free natural farming in the agriculture sector. So those were the key themes. Coming on to the next sector, which is the MSME sector, I think, again, I need to first reinstate the importance of the sector before getting into what the budget has for this sector. So micro, small, medium enterprises sector of the Indian economy actually is extremely important because it actually contributes to around 30% of our Indian GDP. This has a huge contribution into our GDP. Around 50% of the Indian exports are actually coming from the MSME sector. And not just distribution of value, it actually also employs a huge proportion of our workforce. So I think this is one sector which can your GDP, but also create employment opportunities at the same time. So keeping this in mind, I think the government has come ideas to boost this sector, which is the portals like Udayam portal, eShram portal, NCS and ASEEM are going to be interlinked. I'll very quickly explain you what these portals are. So for Udayam portal, there was a registration of businesses as an MSME business. eShram portal is actually for creating a national database for unorganized sector. The National Career Services portal actually helps a youth to seek jobs, job matching, job skilling, career counseling services, and all of that. It's a one-stop portal for that. And the ASEEM portal is actually Atmanirbhar skilled employer employing matching system. So the interlinking of these systems, interlinking of these portals, what it will do is that it will just widen the scope of these databases. It will work as an organic database for all the employment, labor market, MSME related things into a one-stop solution. So this is something which has been done. Apart from that, I think providing credit has always been a major theme. So providing easy loans, providing credit guarantees, especially because in the past 2 years, the pandemic has hit very bad to the small and medium businesses. So for that, if they want to revive back, they will need some loans from the banks. And for that to happen, the government has to come in here to provide that guarantee so that there is easy lending happening in MSMEs and the credit flows into the system. So these are some important announcements related to the MSME sector this year. Another very important part of our economy is, I think, human capital. And human capital is actually dependent on how much are you investing in your social sectors. So here I've tried to club three sectors, which is majority the labor market, which constitutes your job creation, your skills, etc., employment creation and activities. The second part would be the education sector. Then there is health sector and then women and child development. So for digital ecosystem for skilling and livelihood, Desh Stack e-portal will be launched to actually skill and reskill and upskill through online trainings. So I think in the times of the pandemic, we all have understood the power of digital technology and how it can actually reach not just the urban areas, but the rural remote areas as well. So we already had some schemes like Pradhan Mantri Kaushal Vikas Kendras and all these yojanas for skilling. But now the government is also having a digital push to this whole ecosystem of trainings. So this is something again which is expected to actually have reduced the structural unemployment in the economy and actually skill people up for the existing job sector. Then another sector is education sector, where I think One Class One TV channel program was launched under the eVidya portal. So this will try to reach out to the people where the education system being closed for now near to 2 years because of the pandemic has had a huge impact on the school education, especially has had a huge impact on the lives of the students. So to actually address that, this again a push towards digitalization of education was seen in the budget, and a digital university announcement was also done by the finance minister in this budget. Key sector is health. I think last year we spent a lot of amount on health because of the pandemic, reviving the primary, the secondary, and the tertiary healthcare system under the Ayushman Bharat mission. And now, a few months ago also, the government, the Prime Minister of India actually created that National Digital Health Mission, and some of the details have been rolled out in the budget this year also. So again, I think keeping in mind the current realities of the time in terms of health sector, the government has actually come out with a very interesting program. Mental health was also covered, which I personally was very happy to see that Tele e-mental health portal was also launched, where there will be different online counseling sessions, and all of that will be also covered. Mental health was also given due importance in the health ecosystem. Part of it is actually the women and child development, where they talked about the existing scheme. There was no new scheme as such, but these are the existing schemes of development, where you're focusing on the um, pregnant ladies' health and the malnutrition among the children, the newborn babies and all of that. And the Anganwadis were upgraded, where nutrition was also given a lot of focus on. So all in all, the social sector also had a few areas for development of the vulnerable sections, as well as focusing on health and education. So next sector where we would talk about is going to be the overall resource mobilization in the budget. So there were many themes which are actually covered every year in the budget, and instead of focusing on each of them particularly, I try to club them under a section. And in the resource mobilization section, what I try to do is that what are the other areas where the government has tried to bring their focus on by increasing their spending. So that was one area which is production linked incentives. So government has actually increased their allocation by 19,500 crores for the production linked incentive schemes. I think again, this is an extremely important step for the economy, and a very efficient step as well, because we've been seeing that how production linked incentives have led into increase in manufacturing into the sectors of mobile phones, semiconductors, chips, etc. So this particular scheme actually uh, makes India to be able to stand up in the manufacturing race where the world is, and actually develop our indigenous capacities to fight the competition. And again, aligning this with the Atmanirbhar concept of the vision of the Prime Minister, production linked incentive schemes is extremely important for different sectors. These sunrise sectors have already been identified by the government, where production linked incentive schemes will be aligned with, and the additional allocation will actually help us in boosting manufacturing. And obviously, if the manufacturing is going to boost, there would be some jobs created out of it. So that is one part of the resource mobilization plan. Second plan was data centers and energy storage systems. So I think in this particular current globalized world, we all understand that important data has become. And as we all hear that data is the new oil in the current scenario, we actually have to push these data centers, the creation of these data centers and the energy storage system. So giving an infrastructure status, how does it help these sectors is that once you give an infrastructure status to a particular sector, you get easy lending for longer periods of time. So if you want to develop your own data center, you will get easy access from banks. You will get easy credit access from banks for a longer and a sustained period of time. You can take long-term 50-year, 60-year loans from the bank at very cheap rates. So this is the point of the infrastructure state. Coming on to the sovereign green bonds, I think again this is a very important area for India right now, because after I think to fulfill the promise of the Panchamrit at COP26 this last year itself, where government plans that how India is going to reach towards zero basically carbon neutrality. So for that, again, climate finance and green finance becomes a very important area to actually nudge and signal the market that yes, the government is ready to invest into green infrastructure, into green economy, and making our economy more sustainable. Green sovereign bonds were rolled out. So this will help in actually improving the resources for green infrastructure, green uh, areas like not just in terms of infrastructure, but there could be easy financing wherever if you want to invest in a green sector as such. So this was also an important area. There was also an introduction of digital rupee by the Reserve Bank of India officially, because I think it has already been in news for a very long time. We are reading about the central bank digital currency. It has now been officially announced that yes, the RBI will be coming up with this in the next financial year. So I'll very quickly tell you that why is this CBDC important, or why the RBI has come up with this idea of central bank digital currency, and how is it going to impact the lives of the citizens? How does it make my life different from what it is today? So the central bank digital currency will actually reduce the cost of currency management for RBI. It will be easier for RBI to manage the currency flow in the economy. And from a perspective of a consumer, it will actually reduce my settlement risk, which I do in digital payments. So right now we use these accounts, the mobile payment systems like um, Google Pay or all these platforms we use. You actually use this platform to transfer amount, and then there is a settlement system happening between the two bank accounts. But if I have a digital currency, it will be real time settlement. That means that if I pay 100 rupees through the CBDC, it will directly go to that person. You don't have that payment settlement mechanism between the banks. It will be just as good as giving 100 rupees in cash. It will just be converted into a digital transaction. So this is going to actually bring down your settlement systems risk, and it is all going to make it more efficient. So I think it will also increase your cost cross-border settlements in terms of transferring money from rupees to dollars and all of that. So again, this is a very good step by the RBI. And the last bit of the budget which I'm going to cover is that there was a tax announced on virtual digital currencies. About 30% of around 30% rate will be levied on the virtual digital currencies, which cover all your bitcoins, Ethereum, and all these cryptocurrencies which people have been investing in terms of if you take it as an asset or if you take it as an investment or all of that, it will be taxed at the rate of 30%. So I think whatever areas I've tried to cover were the major themes. Obviously, the budget has much more different areas to be covered. Like there was a push to the sunrise sectors. R&D push was also noticed in this budget, where government is trying to invest in the research and development of different areas like agriculture, defense, etc. Then there was a push for developing infrastructure for Northeast. I think again this is a very interesting point, because Northeast, I think, has a lot of potential for India in terms of the international exports, but the infrastructure currently challenges the infrastructure there. So government has actually tried to push money into the infrastructure for development, actually reduce your logistic cost and increase your exports. And another part was that improve budget for defense. So I think again pushing money into defense will lead to your job creation, employment, and also fulfill your vision of being indigenous in capacity development. So these were the focus areas. Overall, I would say that there was a lot of focus on pushing capex into the economy, which is pushing capital expenditures, increasing that multiplier effect in the economy. And what the government is trying to do is that the more money the government pushes into the capital expenditure, the cost of doing business actually reduces. And the private investors right now are in a position to see that, okay, if the government is investing, it is reducing the cost of business. It is a good time for us to invest in India right now. So this will actually increase the private investment, which has been muted for a while, and especially after the pandemic hit. So this will actually increase the private investments and unleash the animal spirits. And once this is done, I think we can actually enter into the virtuous cycle, which everybody keeps talking about, that we want to enter into the virtuous cycle of development and capital expenditure, which is going to happen when the private investment is crowded in by the public investment. So this was the overall theme of the budget. I think we have great hopes that whatever the government has tried to do in the budget, it actually unleashes those animal spirits. And I think Nancy in the starting said that budget is not just a statement of numbers, but it is actually a statement of the aspirations of the people. So I think it actually unleashes those aspirations through this particular statement. I would like to now ask if anybody has any questions. They can put it in the chat box, or they can ask if the organizers allow them so. I'll also ask Siddhartha if he has any comments, concluding comments for the same.
Yes, thank you, Nikita. So one of the things which, since you are from legal fraternity, a lot of you are from legal fraternity, you might be interested in, and you might be listening a lot, would be does taxation on virtual digital assets and cryptos, does it legalize them? Now, that's something which is again a gray area till now. Just because the government has taxed on it. My take is that implicitly the government is saying that it is legalized because the government is saying that we are going to tax this particular commodity. I mean, not something which the government promotes. Something like gambling. Gambling is also which is taxed. So if you win certain amount on Kaun Banega Crorepati or any horse lottery, you're going to pay tax on that. So kind of implicit there. But I think from a legal point of view, there needs to be a lot of clarity, especially on how these things will be operating simultaneously with the digital rupee issued by the central bank. So that is something that I just wanted to add on, and we'll be happy to take any questions if they are there. You can put it on the chat box, or you can, if the organizers allow, you can unmute yourself. Yeah.
Has not doesn't give what is going to be the stand of the government. And I was also listening to the finance secretary recently, where he very clearly pointed out that putting a digital tax doesn't actually legalize it. So the government is still in the process of formulating policies and still having discussions in that area, that how they want to regulate or how they want to tackle the cryptocurrencies. But yes, their first step towards that is taxing it and actually bringing those transactions and making it more accountable. So I just wanted to share that as well. I will be happy to take your questions. I think we already have such a wonderful insight given regarding the budget by both our speakers. We are really grateful for your benign presence. So now we'll be taking the questions. Unmute Akshay Sharma. He's having a question. Akshay, you can now ask your question to our speakers.
Okay, there is a question on the chat box. I'll probably take it. There's a question on impact on bond yield. Although we don't want to get in. In fact, in the initial slides, we had put a slide on government bonds as well, on government bond yields as well. But given the audience, we thought that it would drive you crazy that what is happening in terms of what has this got to do with government yields. To tell you in a nutshell, सपोज देर आर 100 रुपीज इन दी मार्केट. अगर सिर्फ 100 रुपए मार्केट में पड़े हुए हैं और उसमें उस 100 रुपए में से गवर्नमेंट कम्स इन एंड बोरोज 70 रुपीज आउट ऑफ इट. एंड पहली बात, गवर्नमेंट को क्यों आसानी से मिल जाएगा? बिकॉज गवर्नमेंट इज अ क्रेडिबल बोरोवर. Government will not default on its borrowing. Therefore, of that 100 rupees, everyone will want, all banks will want to lend to the government first, because it's a safe fund of kind of borrowing that is done by the government. So all that is left in the market in that pot is just 30 rupees. अब वो 30 rupees सबको चाहिए, सारे private sector को चाहिए. Now you have a classic situation where there is little money left in the market, so the money supply is less, but the money demand is more. And whenever the money demand is more than money supply, the price of that particular commodity will increase. And in this case, it is the interest rate. And if you see for the last 4 to 5 days, the bond yields, which is the benchmark that we consider is the 10-year par value bond yield, it has been increasing for the last few days, and it has now almost breached 7% value. And in fact, because अगर government का जो yield है, जो government का paper के ऊपर जो interest है वो बढ़ रहा है, तो कॉर्पोरेट का क्योंकि वो और ज्यादा अनसेफ है तो इसलिए वो भी बढ़ेगा. दैट हैज रीच्ड समवेयर अराउंड 7.3 7.4%. सो अल्टीमेटली व्हाट इज हैपनिंग इज दैट द बोरोइंग कॉस्ट इन द इकोनॉमी इज इंक्रीजिंग, एंड इन फ्यूचर इट विल ऑल्सो इट कैन फर्दर एनहांस. और अगर बोरोइंग कॉस्ट इकोनॉमी में इंक्रीज हो जाएगी तो इंटरेस्ट रेट इंक्रीज हो जाएगा. इंटरेस्ट रेट इंक्रीज हो जाएगा, उसका इम्पैक्ट इन्वेस्टमेंट्स पे पड़ेगा. पीपल विल नॉट बी एबल टू बोरो, वी विल नॉट बी एबल टू कंज्यूम मच, use credit cards, buy more houses, buy a car. So all of that is going to get impacted. So therefore there is now a challenge in front of RBI in the coming months, that it has to manage inflation. Inflation आने वाले time में increase होने वाला है, especially because of rate hikes which is happening across the world. And at the same point of time, the RBI also needs to pump in money just to support this enormous borrowing which the government has done. So this is the challenge which the government and the RBI is together going to face in the coming fiscal, and which could have probably an adverse impact on investments if it goes out of hand. Any other question? Digital gold. No, sir. Yeah, Nikita can answer it.
Yeah. So in the finance bill tabled in the government, they've actually defined using a digital representation, like I think these all XDFI, crypto coins, Ethereum coins, etc. Also the non-fungible tokens, the NFTs or any similar token by which actually uses this sort of technology. Uh, Still now only this information is out. They've also said that any other digital asset which the government wants to put it in this virtual digital basket may be actually notified through an official gazette. It will come out actually in an official gazette to what will actually constitute. But prima facie, I don't think so that digital gold will be considered as a digital asset to be taxed under the virtual currency head. So yes, I think blockchain-based virtual currencies are what will be considered to be taxed. There's a question by Sushant Narang. How can we tackle the problem of terror financing through cryptocurrency? I think I stick to the questions pertaining to the budget right now, and this is we have no views on the same.
See, if it remains to be an unregulated entity, so the one of the major reasons is to regulate the end use of these digital currencies. But that inherently regulation of these currencies takes out the major benefit that it has, which is that it is distributed ledger. So ultimately, if you're going to regulate it, it loses certain charm that it has. The other major charm that it has is that it does not involve any transaction costs. So what you will see is that around across the world you will see different countries, and it's already started. Different countries are now experimenting with their digital currencies. And once that becomes a norm, I think a lot of people will see the transition from these bitcoins to these backed digital currencies, because right now these are just speculative elements. These are just speculative in nature. We need to control that as well, because ultimately it hurts the investors, the retail investors as well, because they have no knowledge. You have no knowledge how the value is changing. For example, for the last few months, Bitcoin has dropped around 20 odd percent from $55,000 per Bitcoin. I think it's right now around 35 or 40 thousand dollars. So you really do not know what drives these values, and it also is being driven by tweets. For example, you will see there is a huge correlation between how cryptos work and the kind of tweet sentiment that Elon Musk makes. So you can't have such an unregulated market where an individual can drive the price and can drive the sentiment of the market. So regulation though is needed, but what a lot needs to be seen, that how as a world we are going to. So we know that it supports terrorism, and that's one of the reasons that the government is trying to regulate. Okay, can you repeat the question, please? The question is not clear. What losses with capital gains?
Losses with capital gains. I want to understand is that so can you please put again your question with some more clarity?
Okay, let's take the next question.
Please put your question again in the chat box.
Let's take the next question. Yes, Isha.
Right now, during the pandemic, there was a lot of expenditure by the center and the state, and the meanwhile, the reduced due to this pandemic. So, how are expenditure and receipts? Is it that we are that fiscal deficit is increasing and we are pushing the debt on our future generations?
Nikita, you want to take this?
Yeah, sure. So I'll take the first part of the question, and you may take the second part. So as you mentioned that yes, there was a lot of expenditure on health. An analogy with reducing income and tax is not a good way, because if you actually see the tax buoyancy and the tax revenues of the government, they have actually increased. If you see the GST collections for past few months, which has been one of the achievements as quoted by the finance minister. Also, she lauded the effort by the taxpayers, and she actually so basically if you see the tax buoyancy of the revenues, it has actually increased. So this gives more room to the government to spend. So if you have more revenues, obviously you have more room to spend. So that is one part. And on the borrowings front, I would say that borrowings are always an intergenerational or a temporal choice between what you want to consume today and what you want to pay later. So that is always it's not just with this budget, it's with every budget. Whenever you borrow, you actually are trying to consume something today and you want to pay it later. So that is something which is inherent with a borrowing concept of borrowing. Siddhartha, you can throw some more light if you
Yeah,
want.
in technical terms, although I didn't want to get into the technicality of it, it's basically something in macroeconomics we call it as Ricardian equivalence. I mean, if you borrow today, your future generations would have to pay, but it is on the assumption because the future generation will have a higher income level, therefore they will be able to pay back the loans that we are taking at this particular level. So that's the assumption that we have while borrowing, and of course, the revenues. I mean, the government was spending a huge amount during COVID on revenue expenditure. Simultaneously, its revenue receipts had fallen down because of the lockdown. So we in India had one of the strictest lockdowns in the entire world. So there is an index which is published by Oxford called as Oxford Stringency Index, and we were ranked the highest on that index because our lockdown was the most strictest in the world. And therefore you see that the mobility and the production of goods and services, the supply chain, all of that had completely virtually stagnated. So therefore the government's ability to raise taxes during that time, especially through GST and income tax and your corporation tax, had reduced. Whereas the government tried in that particular year, we are talking about year 2020-21, the government started increasing its revenue through excise duty. It started raising prices on petroleum products to compensate for the money that it was losing on the other accounts. So that is how the government tried to micromanage the receipt side. And on terms of in terms of borrowing, in any case, as we saw in terms of fiscal deficit, it had climbed to 9% of the GDP. So and that's not just the case with India; it's across the world that you're seeing that every country had to borrow a lot of money and had to spend a lot of money on to protect its vulnerable section. And perhaps that is why you see an inflationary impact throughout the world right now. So that was our strategy. However, we took a strategy which is also described in the economic survey as an agile strategy, whereby we took something called as an Bayesian updation concept, where what you do is you wait for the data to come in, and based on that data, you make real-time measures, real-time policy measures, and real-time response to how the economy is working out. Instead of spending the entire money at one go, we had those Atmanirbhar packages in different forms in the year 2020-21, seeing how the economy is performing, and then spending that money. In fact, last year's economic survey also quotes something like that: if the brakes of a particular car are completely pressed, there is no point of pressing the accelerator. So if you're pressing the accelerator of a car where you've also pressed the brake, it is only going to burn your tires and your fuel efficiency. So instead, what we did was we saw when the car can move, and then we slowly started to press the pedal on the accelerator in terms of spending. And that is what we call as agile spending or agility in terms of policy making, which is also mentioned in last year's economic survey as well as in this year's economic survey. You can find it in the second chapter. Negative, that Isha, that basically means that year on year growth. So that is not negative capital expenditure, it is year on year growth. So for example, अगर आज आपने 100 रुपए का एक्सपेंडिचर किया है और अगले साल अगर आप 90 करते हो, तो 10 अपॉन आपने 10 माइनस कर दिया ना, -10 upon 100 is -10%. So it is in terms of percentage year on year that it has gone down. Similarly, वो 100 से अगर 130 हो जाता है तो वो 30% इंक्रीज है. कैपिटल एक्सपेंडिचर नेगेटिव नहीं है, उसका पेस जो है वो चेंज हुआ है. We are talking about the pace and not the absolute number per se. Okay, I think there's one more question. As we know, due to the pandemic, inflation has increased and reducing subsidies during this period. Is it ideal to step taken by the government for the sake of common people? So Ruchika, you can have multiple views on this. What the government is trying to do is to look at growth on a long-term horizon rather than a short-term horizon, and it is trying to maximize the efficiency of money by spending more, which gives better return in future rather than just focusing on this particular year. So yes, I mean, if you have enough money, why wouldn't you spend both on subsidies and NREGA and all these schemes, and simultaneously spend on capital expenditure? But you have to realize that we in economics have to work with limited resources, and we can either spend on what is needed currently, or we can think of what the economy might need in future. So the government's logic has been pure multiplier effect. अगर आप 100 रुपए किसी के हाथ में आज दे देते हो तो वो उस 100 रुपए को खर्च कर लेगा और किसी भी आइटम पे कंजम्पशन गुड पे खर्च कर लेगा. बट अगर आप वो 100 रुपए, अगर आप कैपिटल, अगर आप स्कूल बना देते हो, अगर आप ब्रिज बना देते हो, तो ब्रिज बनाने के लिए यू नीड कंस्ट्रक्शन आइटम्स, यू वुड नीड स्टील, यू वुड नीड लेबर. सो उसकी वजह से वो 100 रुपए का जो मल्टीप्लायर इम्पैक्ट है वो बहुत ज्यादा है. And that is what the finance secretary had in multiple interviews had said in the last 2-3 days, that its calculation is based on the fact that both RBI and NIPFP, two major research, there are multiple researches done by them, which shows that the multiplier effect of that 100 rupees spent becomes 200 to 300 rupees if it's spent on capital expenditure, whereas when you spend it on revenue expenditure, it is less than 100. So, I mean, it's a matter of choice which the government has taken. As in case of economics, the classical definition is it's about the scarcity of resources. So, our resources in a developing state, there is a scarcity of resources. You have to choose a particular path and then make the most appropriate action. We believe that this is what the government has done, and we honestly hope that it brings future returns to our economy. Nikita, would you want to take this?
I think so. Every particular topic has two sides of the coin. So I think question where your station. My point is that at the same time, you want to keep pace with the globalizing world, with the technology which is improving. But if the private sector is already doing all of that, why should the government sector not pitch in? And actually, personally, I don't think so that it's reducing the employment as such, but what is it doing is that it's creating jobs of another type. It is creating another skill set which is needed for those jobs. So once you create a data center, once you create technologies in AI, machine learning, etc., you need people for that as well. People are needed ultimately to manage all these technologies, but it's just that the skill set of a person using those technologies will be very different from a person who is not digitally trained. So having opinions on is it employment generating or employment not generating, I think that is something which we can't correlate to. But yes, it is going to create jobs of certain different kinds. And I think personally, I believe that keeping pace with the times we are living in currently, it is extremely important to keep pace with that. And to address the problem of employment, government should be coming out with policies directly tackling that, and not curtailing the digital technology. They can be focusing on labor intensive manufacturing basically, which will be creating much more jobs actually. So it's not digital economy versus employment. It is actually tackling both these problems as different subjects. So that is my personal opinion on it. So if you want to add anything.
Yes. So Rishabh, try to imagine that अगर COVID नहीं होता, ठीक है, तो this would have been a virtual session. If this was a virtual session to be held in Chandigarh, I would have to pay for the petrol. All of you would have to pay for the petrol and then come there. Then कोई center आप book करते तो उसकी एक cost होती. So you are saying that all of that is going to is basically leading to a reduction in expenditure. But at the same point of time, we are also saving all of this money. All of us are saving this money and attending this webinar through internet. So it's just that a different kind of a technology is created, and you need to keep pace with it. In economics, in political economy, we call it as Schumpeter says, gale of creative destruction. Whenever there is a new disruptive technology, people will lose employment, and that is something that has happened in last 200 years. जब इंडस्ट्रियल रेवोल्यूशन आया था तब भी तो लोग पहले हाथ से काम करते थे, फिर मशीन्स आ गई. फिर अब जब थर्ड इंडस्ट्रियल रेवोल्यूशन आया इन टर्म्स ऑफ आईटी, people were used to typewriters, now we have computers, and we are in the stage of the fourth industrial revolution, which is AI based, which is ML based, where people will need to reskill and upskill every few years, because if you don't do that, imagine the world in metaverse. You see what Facebook is doing. You don't need to even go outside of your home. You just wear those Oculus glasses and आपको feel होगा कि मैं क्लास में ही पढ़ रहा हूँ. तो उससे resources भी बहुत सारे save हो रहे हैं at the same point of time, and new kinds of jobs and new kinds of opportunities are now being created. It's just that you need to find those opportunities. You need to be extremely skilled for those opportunities. And as Nikita said, these have to go hand in hand. If you want to create more employment, then you have to work on those labor intensive industries in terms of textiles, clothing, shoes manufacturing, which the government is anyways planning to do. So that is what is more needed. Then I think there is one question which I saw, no provision of wealth tax, Vikram's question. Nikita, you want to take it or should I take it? I mean, I at least have a small view on it, because I've been reading on this. Just food for thought for you guys. Now, अगर आप इंडिया के टॉप 897 लोगों को सिर्फ 2% एक्स्ट्रा टैक्स कर दो, तो इंडिया कैन प्रोड्यूस, वी कैन हैव 14 to 15 बिलियन डॉलर्स एवरी ईयर. बट द प्रॉब्लम हेयर लाइज कि उनकी वेल्थ पे आप कैसे करोगे. आप उनकी जो मेजर वेल्थ होती है वो इनकम नहीं है. वेल्थ एंड इनकम आर टू डिफरेंट कंसेप्ट. वेल्थ इज बेस्ड ऑन द स्टॉक वैल्यूएशन. वो स्टॉक वैल्यूएशन चेंज हो रही है बार बार. इट्स अ फ्लो कंसेप्ट. इनकम इज समथिंग जो आप एक बारी में आ गई एक साल में, तो ये एक फिक्स एक ये स्टैटिक कंसेप्ट है. तो आप उस पर आप टैक्स लगा सकते हो. बट वेल्थ पे टैक्स करना थोड़ा मुश्किल है. किस बेसिस पे करोगे? बट येस, अक्रॉस द वर्ल्ड there is a lot of debate on taxing the super wealthy. In fact, in my personal opinion, there should be something called as an endowment tax. अगर say मुकेश अंबानी अपने endowment अपने बच्चों के लिए छोड़ के जा रहा, तो that endowment can be taxed, and so a very small amount should be taxed, but small amount of a huge bulk would also give you a huge revenue. But again, it will be unpopular, at least with the super rich. But at the same point of time, the world needs this kind of taxation, because what we also see is in the age of COVID, we are seeing an extremely iniquitous economic scenario where you have millions of people who have gone into poverty because of the impact of COVID, while you are seeing that in 2021 itself, we had 42 unicorns coming out of India. So in terms of unicorns, which is a billion plus company, India ranks third after US and China. Whereas in terms of inequality also, we are right up there. So that is something, yes, it's good provision, but on what basis and how will you implement that? That's a major challenge.
Thank you so much for this question answer round. For that feedback form for their certificates to be generated. And now I would like to invite Mr. Siddharth, co-convener, Think India, Punjab University, Chandigarh, vote of thanks.
Thank you, Nancy. Thank you, sir. Thank you, ma'am. I would like to thank our honorable guests for today, Mr. Siddharth Rathore, sir, and Ms. Nikita Jain, my friend. It is part of this session today wherein you both analyzed the union budget, discussed in detail about the economic impact and legal implications involved therein, while also catering to the queries of our attendees. I express my heartfelt gratitude to both of you for imparting us with knowledge. Further, I would like to thank the convener of Think India Chandigarh, Mr. Prashant Goyal, and the convener of Think India Punjab University, Mr. Kapil Sharma, who gave us this opportunity to interact with such personalities. It wouldn't have been possible without their constant support and guidance. The organizing committee has put in all their efforts to make the session a fruitful one. Events like these, they cannot be planned overnight. It requires a lot of planning and execution to conduct such events, and we have been fortunate enough to be supported by a team of highly dedicated and motivated students and members. Last but not least, audience, I would request everyone to please switch off their mics, mute their mics. So the economic committee the organizing committee has put in efforts to make this event a fruitful one. And last, but I would like to thank the audience for being patient throughout the event and This event has been possible because of the collective efforts of everyone present here. Thank you, everyone. It was a great pleasure to host you all. Looking forward to more such wonderful events. Thank you.
Thank you very much, everyone. Thank you for calling me, uh, and I've just posted my LinkedIn address in the chat. You can always connect with me and Nikita over LinkedIn. We'll be more than happy to answer all your other questions that you have. Thank you very much, guys.